Hey, how's it going, everybody? Mike here. I wanted to take a little bit of time and chat with you today about kind of a prediction that I'm seeing from a lot of people, across YouTube, a lot of big names in the real estate space, really, and other kind of commentators as well, that are predicting, a real estate crash in 2021, and which is kind of interesting because obviously right now we're seeing real estate prices across the country actually take out all-time highs. So the latest report is, I think, in all regions, median home prices are at the highest level they've ever been. Obviously, if you watch my last market update video here in the Los Angeles area, you saw that we had a huge spike in median prices year over year, compared to a year ago. So definitely right now, we're seeing an acceleration in real estate prices. Now, I talk to people every day. As you probably know, I'm a real estate broker here in the area. And all the time, people ask me, hey, what do you think is going to happen with real estate? Do I think prices are going to go up? Do I think they're going to go down, next year, in a couple years, so on and so forth. And so I want to take some time to kind of answer that question. Now, logically and, initially myself, I expected that we were going to have some deflation in the real estate space as a result of this coronavirus pandemic, this recession, depression that we're in now. And obviously, we're not seeing that. And I think there's several reasons why we're not seeing that. And I think there's some real big question marks at the end of what those reasons are and how they're going to affect potentially the real estate market going forward, that unless we know the answers to those questions, I think it's going to be very hard to predict what's actually going to happen. A good example, of course, of this is if you look at the stock market, clearly the economy is worse off than it was pre-coronavirus today. But of course, we see the stock market, taking out new highs. Both the S&P and the NASDAQ are in all-time record high territory. We're starting to see, extreme sort of, ridiculous sort of behavior in certain stocks like Tesla, for instance, that's trading at roughly 1,100 times earnings, which obviously makes no logical sense from an investment standpoint, unless maybe Tesla has the prospects of becoming the sole automaker in the entire world or something like that, which obviously isn't going to happen. You have Apple that, just based on the news of a simple stock split, is, trading at nearly double what it was just a couple months ago, adding massive amounts of market cap, to the overall value of the company. So the question is what we're seeing now, really similar, analogous to what we're actually seeing in the stock market currently. And so, it really comes down to understanding how supply is being affected and how demand is being affected. And of course, I studied economics at university, and so for me, this is just natural thinking. So I'm always thinking about how both of these factors are affecting prices in the market. And clearly, the Federal Reserve and the government are dead set on doing everything they can to prevent real estate prices from coming down, from allowing the market to fundamentally adjust the way that it should adjust based on the new economic reality that the country is actually facing. And so if we look at the demand side, that is being heavily influenced right now by low interest rates and by just increased leniency in the lending space. Now, real estate mortgage rates have actually hit the lowest point in all of recorded history, and they've hovered around that point over the last couple months. Now, that is highly stimulative in terms of the demand for real estate, in people's ability to continue bidding up houses, at different price levels, in people's ability to be able to qualify, and so on. Also, if you look at the demand side and people's ability to be able to finance properties, the Federal Reserve has entered the mortgage market, and they've bought up, hundreds of billions of dollars of mortgage-backed securities. And so what this is allowing lenders to do is to continue to go back out there and keep making loans. In fact, what we're finding right now, being a broker, real estate broker, working with clients and seeing what's happening behind the scenes, is that really most lenders only want to do loans right now that they can immediately sell to Fannie Mae or Freddie Mac or whatever the case may be, because ultimately all of these loans are getting packaged up and immediately sold to the Federal Reserve. Now, the Federal Reserve is really just printing the money out of thin air and taking on that debt, a lot of it which probably is going to ultimately become bad debt. And then at some point in the future, that money is going to have to get paid back, in taxes, future taxation, or inflation, which is probably more likely the case. So you have demand being heavily influenced by people's ability to continue getting loans because of low interest rates, and because lenders that would otherwise be cutting back, understanding all the job losses, the difficulty in the economy, and how that will likely affect borrowers in the future, instead are just out there making loans like everything's totally fine because they know somebody's going to backstop those loans, buy them from them very quickly, and of course the Fed is just going to print money to buy large swaths of these mortgage-backed securities, that get packaged up, right? So you have on the demand side a lot of artificial stimulation. Now, it's important to keep in mind that there's only so far that they're going to be able to go with trying to stimulate this way. So what I mean by that is that the federal funds rate is already at zero. So mortgage rates have adjusted. In some cases, they're below 3% right now for a 30-year fixed conventional loan. And obviously, they can't really go any lower, right? If the Federal Reserve is already at 0% on the federal funds rate, they're shooting for an inflation rate of above 2%, at least on the numbers that they consider to be truthful inflation, the CPI, which most people argue, or if you look at shadow stats, you see the way they've modified using that metric to kind of, understate really the true inflation that we're seeing in the economy. But in any case, assuming that that's accurate, they want 2.25% inflation, and people are getting 30-year loans at 2.85, 2.95%. There's really not a lot of room there to continue going down in rates. So the Fed has already stated that they're not really too interested in going negative with interest rates, and so that would really be the only other way to create further stimulation in the housing market, at least with interest rates as those are concerned. Now, I can't imagine other ways where they might be able to stimulate the economy further, but they'd have to do it differently. So what they could do, for instance, is offer to, additional down payment assistance programs, or maybe say, hey, you're out of a job right now, we'll help you buy a house and you don't have to make any payments until you get back to work, up to a couple of years or something like that, right? So there's a lot of ways, creative ways, that they could all of a sudden come into the market and start trying to continue to manipulate, the demand side of the equation, but we'll have to see how that plays out. At least for now, rates are super low, so people keep on borrowing. They continue to have access to money that otherwise wouldn't be there if lenders were making decisions, based on sound fundamentals and so on. Now, on the supply side, based on what's happened, in the market, in fact, actually, in the last week, some new statistics have come out. I believe 8.2% of all 1 to 4 unit mortgages are currently delinquent, and that does not include the mortgages that have went into forbearance in most cases. So really, you probably have, between 10, 20, 25% potentially of mortgages in the United States on 1 to 4 unit properties that are either in forbearance or are currently delinquent. So this is a massive number of mortgages that people can no longer make the payments on. So what's happening is that a lot of those mortgages, especially if they're government-backed, the government mandated that the lenders offer a 1-year forbearance on all of those mortgage loans, and they also mandated that the payments cannot be, a balloon payment at the end of that year, that it had to be rolled on to the back of the loan. So you have, a lot of people that have been able to kind of get out of jail free, kind of kick the can down the road for at least another year. And so what that is doing is it's preventing a lot of supply from coming on the market that likely would have come on the market. Because you have to remember, if all of a sudden you lose your job, you can't make your payment, but you have $200,000 equity in your house, the writing is kind of on the wall, right? So typically what happens when we're entering a recession and people are losing their jobs is that they want to put their house on the market, take some of that equity so they can live on it, rent a place, maybe move somewhere less expensive, etc. But a lot of that is not happening right now because of what the government is doing to prevent that from taking place. The next component that we're seeing affect, in my view, supply substantially is that right now there's a lot of people who stop paying their rent. I mean, it's a huge percentage of people that stop paying their rent. And so what's happening with that is that you have to realize that if a person is no longer paying their rent and the government is saying they cannot be evicted, then the owner of the property is in a very difficult position because it's very hard to sell a property that's not generating any income at all. So if you're a buyer and you want to buy a property, an investment property, and you want to put, the typical 25% down or 30% down, the lender is going to look at the current income from the unit or units that you're buying to help you qualify for that property. Now, if there are tenants in the property that aren't paying their rent, that makes it very, very difficult for a lender to want to loan any money on the property. In fact, they wouldn't unless the buyer puts down, 100% or whatever much higher percentage they're going to need to qualify for the property, depending on how many units are not actually paying their rent. So what this is doing, and also on top of that, if you're a buyer and you want to buy an investment property, a lot of people don't want to buy a property. Let's say you do have all cash to purchase something, that has a tenant or multiple tenants in it, that are not paying their rent, and so on. And finally, a lot of times when these tenants stop paying rent, they become uncooperative. So they won't let you in the house to do inspections, for an appraisal. They won't sign an estoppel certificate. So all of those things are also going to prevent a lot of sales. So these are kind of some of the ways that the supply side is being affected by government. And I do think it's kind of interesting that so many people are so confident that next year specifically, we're going to see, a crash, right? All of a sudden, people are going to, be allowed to evict people again, and, these forbearances are just going to end, and the government's not going to step in or do anything else. Because I think that, based on what's happening now, the kind of decay of property rights in America that we've had since the founding of this country, those things are being eroded very quickly right now. And so if the government is already doing these very, very extreme things now, what's going to happen, in a year from now, or really 6 months from now, 8 months from now when these forbearances end? What's going to happen when people continually cannot pay their rent as this pandemic continues to go on, and so on? And so I think there's going to be a lot of pressure, a huge push. There's a lot of desire in the political spheres right now to find solutions to these problems, so-called solutions. And basically what that means is that the normal flow that we would see in the real estate market based on the normal fundamentals controlled by supply and demand just aren't existent anymore. So, really the supply of real estate is heavily restricted right now, and the demand is being heavily encouraged. And as long as those two components are being manipulated at the level that they are right now, who's to say what's going to happen in the future and how soon in the future? So I don't know with any certainty what is going to happen. I do believe that if the government got out of the way and let the markets adjust the way that they otherwise would adjust, we would have to see prices come down in real estate. But do I believe that they're going to do that anytime soon? I really don't. So I think based on that, you have to prepare for any eventuality. And I think one of the curveballs that most people seem to miss is the inflation that's going to result from all of this vast money printing, buying all these financial assets that we're going to see in the economy in the future. And yes, a lot of that inflation in the past has been kept, in asset prices, but I think this time is going to be a little different. The magnitude and scale of the printing by the Federal Reserve right now is really, something so great that we've never seen anything quite like it in this country. And so we've had a very strong inflationary period before in this country, and I don't see any reason why we can't have it again. And so I think the important thing to consider is that what if we see massive inflation both in, commodity prices, asset prices, and other things that people need to buy, healthcare, food prices, so on and so forth, with the printing of all this money before we ever see a deflationary event. So I think you have to be really smart, very thoughtful in how you analyze this scenario. And I don't know the people that are so certain that 2021 is the magic year where everything's going to finally hit the fan, and real estate prices are going to start crashing. There's going to be deals for everybody to be had. Is really as sound as it may seem. So I think it might be kind of a false promise there. There's a lot of unknowns that go into this ultimate calculation of what's going to end up happening overall. Now, of course, I'll be paying attention. I'll be following it. I'll keep you guys updated as I learn more. Definitely go ahead and click the subscribe button now and take a look at my last market update video. I'll be doing another one in a couple days. And I appreciate you guys watching. We'll see you next time.